Hello, good day. Today I would like to share about the China tech stock, whether to stay away or recover. In doing that, it will have to be looked into the correlation with Nasdaq, Hang Seng, and even with STI. And I will go into the area of oil, Alibaba, and also Hang Seng Tech ETF. I also would like to thank one of the viewer for actually commenting on the analysis. And with that, he also asked on the oil area as well. So that's where I will also put some comment and thought into that. Therefore, please do like, share, and subscribe to my channel so that you can get the latest update on my swing trades. Thank you, and let's go. So in this price action chart, you can see QQQ, which is Nasdaq, and the Hang Seng. QQQ is the one that is having the candlestick, and Hang Seng is the blue line that's moving here. So the year to date, QQQ have went out by about 42.36%, and Hang Seng is around negative 55%. So you can see the big range if you are invested in Hang Seng versus in Nasdaq. The pain in Hang Seng is rather big because you have not been performing right since the start of the year versus the QQQ. Previously, for Nasdaq, during the ramping phase, it's always very important not to short because it's like a car that's running very fast. Therefore, we always have to wait for the formation when it reach a certain stability, such as here. So today, if I look into the Nasdaq, I have already sold most of my US position. And for the Hang Seng, I would think that I would like to add some position to it. And therefore, adding to the Hang Seng, you can actually look into the higher weightage stock. Next, let's look into the STI indices. STI indices have been performing within a box range, around the range of 3,250 to about 3,150. Therefore, please watch for the support around this range. I have recently sold my OCBC by holding about 5 to 6 days, and it gave quite a good return of 2.5%. Today, I do not really have any swing trade that is open in the STI market. Looking into oil, and I also took a look into the fundamental of Kinder Morgan. So oil price have been quite stable in this range, a very tight range. It's rather not so usual from looking at the past oil historical trend. So therefore, I think there is quite a fair bit of big boys that is playing with the oil. And by having the oil to be on such a high range versus, in the past when they are in the 30 to 50 region, inflation will continue to be sticky. Next on Kinder Morgan. Kinder Morgan is one of the largest energy infrastructure company in North America. Financially wise, I think their free cash flow is rather stable. And with oil at a much more higher elevated price, I also will be looking into infrastructures that are supporting oil and also gas as well. In summary, oil stabilizing around this region will result in inflation very sticky. High chances that Fed will have another 2 more hike until the end of the year. So with 2 more hiking until the end of the year, it means the probability of recession will be lower as well. That is my current perception. And on Kinder Morgan, you can see that there is a contradicting view. In coming weeks, I will be also doing some technical analysis on Kinder Morgan. And each of these analysis takes some time, probably usually about 1 to 2 hours for me. So do stay tuned, subscribe to my channel, and I'll provide you my latest updates. On Alibaba, Alibaba is one of the shares that I have not sold away, and I'll continue to hold on to my position and potentially to add. And on a weekly basis, I'm doing the option. So on this week itself, I think for Alibaba, I have already collected about 400 credit USD. And in the previous update, I think I also collected a couple of hundred. So the range of Alibaba will probably move in this range of 86 to 92. So Alibaba is the stock that I have in US that have not been have been called away, but I have added back. The rest of my US stock have already been mostly called away. Next, let's look into the Lion OCBC Hang Seng Tech stock. This ETF can be bought using SRS. So if I look into the Hang Seng Tech stock, the previous low was at 0.6. I done an analytic on HST in 24th of May, and I was looking at a range of 0.55 to 0.57. But with the recent move of the overall macro view and also the price action chart of the indices, I think there is some probability, not high yet, but there are probability that it will test the 0.74 to 0.78 range. So on May 24th, I was talking about, I would prefer to trade 9067.HK, which is the iShare Hang Seng because of the lower expense ratio. But if I see short-term trading on HST, where I can see some resurging of Alibaba, Tencent, Meituan, JD, and Xiaomi, then I will probably take a short-term trade onto Hang Seng Tech ETF. And this ETF, you can use either cash or even like SRS, right? That is your retirement fund. So in summary, QQQ has started the ZZ toppish formation, which was I spoke about in mid of June. So now it's about 1 month they are doing their toppish formation. We have to see, what is the next price action move. Hang Seng have to retest the resistance, and if it did retest the resistance, then it will give a good support to the HST Hang Seng ETF. Therefore, the Hang Seng ETF support have been upgraded. While the market is in the happy mood, I think we should get ready for the traditional month of August and September where there will be more volatility. Hence, please subscribe, like, and share the video with a fellow friend. And your subscription will also help me to motivate myself to contribute more better and free content. And also thank to the subscriber Ronnie for giving a comment. And do give me a like, and this will be very helpful as well. And enjoy the rest of your weekend, and thank you.